Welcome back to my channel. So today's topic is liquidity pool explained easily. Now, many people always ask themselves, what is liquidity pool? Well, today's video, I want to give you a breakdown of liquidity pool. If you have been following this channel, welcome back. And if you're also new, welcome to my channel. And I hope you are gaining some value. And a big shout out to my coach for also guiding me in this process. Now, liquidity is the driving force in the market which moves price in the market. Without liquidity, I doubt if markets will be able to move without liquidity. Above old highs, that's what we call buy side liquidity. That's buy side liquidity pool. Below old lows, sell side liquidity pool. Relative equal highs, relative equal lows. I'm going to show you example on how it looks like. Now, markets move in a sequence of higher high, higher low, higher high, higher low, higher high, right? This is how markets moves for us to be able to get into the market. Above here, this area here, above here that you see is liquidity. Money is there. So market is going to go and take in money. For a buy scenario, this is what a buy side liquidity. So buy side liquidity has been taken. Now, where do you place your stop loss? You place your stop loss below here, right? Now, this below here is your sell side liquidity. This below here is your sell side liquidity. So imagine if you take in a buy order and market goes against you. Market went to grab liquidity from the sell side liquidity. But as market moves up here, market has done the buy side liquidity. So what am I seeing here? The old highs, that's the buy side liquidity, and old lows, the what? The sell side liquidity. The scenario goes also for a sell scenario: lower low, lower high, lower low, lower high, lower low. All these up parts here are liquidity. All these sides here are liquidity. This is liquidity. They are all money. They are all money, right? And what happens when market does a break of structure? That's what we call what? A sell side liquidity. I'm sure sometimes in the future, I'm sure you some people doing some analysis, some traders, and they will do an analysis and whereby they will say when markets break this break of structure, they will tell you, oh, they are going to a lower time frame to look for market to change character and come back into the structure to continue the movement for a what? For a buy side liquidity, for a buy scenario. This is what it means. Some people do trade only this, just taking out the buy side liquidity, come in, take out the buy side liquidity. And what do we have here? The sell side liquidity. And what do we have here also? The sell side liquidity. That is what? Above old highs, and what here? Above old lows. Relatively equal highs and relatively equal lows are also a form of liquidity where market has touched a particular point more than once. You can see here, if I drag here to here, I've gotten what? I've gotten an equal high. I've gotten an equal low, sorry. This is what? A liquidity. But I've gone through my chart to pick up some examples for you to show you how relative equal highs and relative equal lows look like. Now you can see here there's a relative equal highs here. Can you see that here? Markets grab this liquidity up here before it pulled down. Now the beautiful thing about liquidity grab is that when you see a liquidity grab, it always gives out an impulsive move. Anytime there's a form of liquidity grab in a scenario in the chart, an impulsive move always take place. Can you see that here? An impulsive move has taken place around here. Now, if you look inside here also, there was a liquidity grab here. I don't know if I can expand it more than this. There was a liquidity grab here, and what happened? Market did an impulsive move. If you look inside here also, there was what? How many touches? One, two, three. There was what? Liquidity grab from here. You can see liquidity grab around here. Can you see it? The liquidity grab around here. Markets grab liquidity. And what do you see? Impulse move. I tried my best to find some on the chart for you. If you can see here, there was what? Liquidity grab. There was a grab of liquidity around here. And what do you see here? Impulse move. If you go through your chart, you will see amazing liquidity grab. What do you see here? There was liquidity grab. If you put your line here, let me put a line here to show you that market grabs liquidity. Do you see? It closed the week, market grab liquidity. And what do you see again? An impulse move. Let me keep showing you, try and find more examples of liquidity grab. What do you see here also? What do you see here? There was what? Liquidity grab around here. Can you see liquidity grab before the impulse move went down? Can you see it? Break of structure, what? Liquidity grab, equal what? Equal highs. Let me go around again and show you more. If I can find more for you. If you go around your chart, you're going to find a lot of liquidity grabs in the market. Liquidity grabs in the market. Market grabs liquidity. What do you have here? Liquidity grab. Can you see that? There was a liquidity grab here which signal what? An old low. Liquidity grab on an old low, and what market pulled out there for your impulse move. So if you follow this guide very very well, it's going to guide you on how to trade liquidity. You can decide to trade the buy side liquidity, that's our old highs. You can set to say trade the sell side liquidity are old lows, relatively equal heights and relatively equal lows. You can trade that as your own form of liquidity and follow the structural direction of the market. Now, don't forget to subscribe on my channel. I have some amazing content I would love to enlighten you all about. Ask your questions on the comment section. I'm so happily and excited to answer all your questions. And feel free also to share this channel to your friends that are struggling to become traders in the Forex market. Thank you very much.